Okay, I'm putting on the Budweiser cowboy hat for this video because after today, everyone needs a damn drink. The CPI came out. It was terrible. Very, very bad. The stock market sold off almost 3% on the NASDAQ once that happened. The 1 minute candle of the CPI release was 2.36% to the downside, and we have since recovered in a wild fashion. We have moved over 5% from the lows of today to where we are currently at. The low of the day we set at the cash open today was 348.12 on the S&P 500. You are currently sitting at 365.44. That is almost a $20 round move on the S&P 500 for no reason. Absolutely no reason. This, in theory, should not be happening, but we're going to talk about exactly why it's happening here in this video, guys. So let's get straight into it. Hit that like button and subscribe to the channel if you guys are confused, if you want to drink, if you like AMC, if you like, you know, the markets. Just hit the like button for me, baby. Thank you, and let's get to it. So like I said, there's the backstory. Literally in the intro I gave it to you. We fell, we crashed in the beginning of the day, and then we started to go through, I'm gonna call it a short squeeze, specifically around this area. And why I'm saying that is the size of these candles that we were seeing, 1% candles. A couple of them, really. You don't typically see that unless you're getting some degree of a short squeeze, you're getting some good news or something. Well, we did not get that. The CPI report was not something that should have caused this bullish reaction. It's not going to, help the Fed pivot and give us a smaller rate hike. Simply put, it's not going to happen. So what really took place today is you had so much negative positioning and negative sentiment in the markets that once the buyers started to step in, even a little bit of buyers, once you got to this level around 354.50, you started to see shorts getting out of their short positions. And I will tell you guys, I've been in the markets for a while, and 5-6 years now, and some of the biggest rallies, at least short term, are rallies that happen for no obvious reason, right? This was a no obvious reason kind of rally, and these rallies can actually sustain themselves, especially if we get good earnings coming tomorrow. If bank earnings are good, the markets will continue to fly. Also, if retail sales are good, the stocks will continue to fly. So that's the biggest thing that happened today. There was no good news that came out today as far as what I could tell. Now, as far as the actual CPI report, let's go ahead and look. It says inflation jumped 8.2% in September versus a year earlier, hotter than expected, though a slight decline from August. Consumers have seen prices for food, energy, and housing rise sharply over that time. Core inflation, which strips out food and energy costs, jumped to its highest level since 1982, suggesting inflation is broad-based. And you can look right here. It says food at work or school was 91.4% of essentially an increase for September 2022 in one chart. Airfare 42.9%, utilities 33.1%, butter 32.2%, eggs 30.5%, health insurance, so on and so forth. Energy was actually one of the things that didn't contribute to this report all too much, and that's why people are saying, core inflation is really broadening out, and we're starting to see broad effects of inflation overall. So it was not a good thing, guys, and that's probably the biggest thing to point out, is that when you see these rallies off of bad news, they can actually spark into be some pretty epic rallies for the short term. I'm talking for the next couple of weeks, potentially, maybe even through the midterms. Maybe you get more fear around the end of November, and then we really rally in the month of December. That's kind of how I could see this playing out as of right now. But as far as the economic data that comes out tomorrow, 8:30 in the morning, you have month over month retail sales for September. We're expecting that to be 0.3%, so better than last month. So that's going to be hopefully a positive thing for the markets. And then you have the Michigan Consumer Sentiment Preliminary Survey for October coming out at 10 a.m. as well. And this will be even more important, really, to see what inflation expectations are, because even if you look at this chart, you could see as the consumer sentiment started to really get worse, well, the markets were getting worse, right? The consumer sentiment was at its worst in June, and that's where you hit the bottom in the markets, and you've started to see this come back up. So that is seen, in my opinion, as a positive thing, and that will be something that will move the markets in a big way. Good news is it comes out at 10 a.m., so you will have an opportunity to trade around this catalyst if you so choose to. So there is all of that. That's the context behind what is actually happening today. Some other things that are really helping out the markets as well is this: Netflix will charge $6.99 a month for new ad-supported plans starting November 3rd in the US. As you guys know, Netflix is a part of the NASDAQ, the S&P. It's a pretty big company by market cap relative to all the companies in the world. So, you know, to get some optimism behind Netflix, and that was really one of the stocks that didn't perform very well. Netflix and Facebook are standouts in 2022. That's a positive thing. Netflix is up about 5% at the time of recording this video. But other than that, it's been a pretty slow day as far as news. So this rally is definitely coming at a very good time. And hopefully we'll see if bank earnings can actually hold it together tomorrow. You're going to have JP Morgan. You're going to have PNC Bank. You're going to have First Republic Bank. You're going to have Morgan Stanley. You're going to have a lot of banks that do report earnings tomorrow in the morning. And if those are good, well, we're going to be off to the races, in my opinion, for maybe the next couple of weeks. So there is that. As far as what the markets are pricing in for the next Fed meeting, you are firmly pricing in a 75 basis point rate hike, with 1.5% of market participants expecting a 1% rate hike. So as you guys know, whatever the markets are pricing in is what we are going to get, and it looks like as of right now we're going to get a 75 basis point rate hike. So there's that. Let's go ahead and take a brief look at AMC stock and what is actually going on with this stock, because AMC is up about 3% today. The broad markets did see a decent sized short squeeze. I mean, the velocity of it was pretty intense once it first started. You've kind of started to plateau around 2.5% positive. But nonetheless, AMC did not really respond as much as one would think they would if the NASDAQ was up over 2%, but it's still outperforming, up 3.5% on the day. If we go look at the live short interest, you could see a cost of our max of 29.22%, a cost of our average of 26.98%, and a cost of our minimum of 21.38%. With a live short interest of free float sitting at 19.1 and very little shares available, at least over the last couple of hours. You see 100 shares available, 0, 1 share available, 0, 600, 1,000, 0, 1,000, right? You guys get the idea. There hasn't been that many shares that are actually available to be sold short today, or to be borrowed, whatever terminology you wish to put on it. So there is that. As far as the option activity, you're looking at 7 orders totaling $5.57 million with a positive order value of 1%. So it's not looking too positive from the option activity. But nonetheless, guys, when you get a reverse rally like we see right now, when super bad news turns out to be good news, it looks like it's a short squeeze. And it's, as you guys know, it's pretty hard to stop a short squeeze, especially if you're coming around to midterm elections, or when the Fed hopefully will slow down raising rates. You could see how this could turn into a very big rally. And just like I said, for context here, we were down 3% on the NASDAQ, and now the NASDAQ is up 2%. We have recovered 5% on the S&P as well as the Nasdaq for the day. So you might only see, you're up 2%, which is a very good day, but we were actually down a lot. So to be up this much, we have definitely clawed back a horrendous amount of losses earlier in the day. So guys, that's pretty much going to be it. Leave your comments, questions, or concerns down below in the comment section. Thank you for watching. Hit the like button, subscribe to the channel. You guys already know the deal. If you guys want to come trade with me live in real time, link down below in the description of this video as well. And make sure to get your free stocks with Webull, Moomoo, and Public, because after all, it's free 99 and you might as well do that. Nonetheless, you guys enjoy the rest of your day. Have a cold one on me. I'll see you in the next one.